Are you interested in investing in multifamily real estate but don't know how to get started? In this video, I'm going to walk you through the 7 steps to getting started investing in multifamily real estate. And make sure you hit the subscribe button right now so you don't miss more videos about building wealth through multifamily real estate. And if you don't know me, I'm Seth Ferguson, an 11-year real estate veteran, host of a real estate TV show, host of a real estate investing podcast, and a real estate author. So without further ado, let's get started with the 7 steps to getting started investing in multifamily real estate. And step number 1, which I feel is the most important step, but often overlooked, is figure out your real estate investing goals. And this is something I wish I did in my 20s because I would have gone down a totally different path. I started investing in single family homes, but then realized it would take 1,000 houses to hit my real estate investing goals. Can you imagine owning 1,000 houses and keeping your sanity at the same time? That's too crazy for me. So I really wish I went back and sat down and really thought about what I wanted my life to look like, the types of cash flow I would be receiving. So make sure you sit down, and this isn't a one-day sort of thing. Really think about this for a couple weeks and really imagine your ideal life and your situation. Maybe you are a high income earner and you could really take advantage of the tax benefits that come along with investing in multifamily real estate, thanks to depreciation and cost segregation. So you'd want to sit down with your accountant and figure out a game plan. Maybe you're interested in investing for capital preservation because CBRE just released a study earlier this year, but they looked at the past 2 recessions and they found that multifamily real estate outperformed all the other types of real estate in recessionary times. So lots of things to think about. Don't skip over this because, like I said, I would be down a totally different path now, much farther ahead, if I would have sat down and figured out my goals and what was the best type of asset for me. So that's step number 1. Step number 2 is learn about the asset. Because there is a big difference between residential real estate, so your single family homes, your duplexes, triplexes, and commercial real estate. The way they're valued is different. With the single family home, we use the comparable approach, where you look at the same street or neighborhood and you find similar properties, and that's what your house is worth. Well, with commercial real estate, we use something called the income approach, which gives us as operators a lot more control in the value of our asset because it's all based on the NOI, or net operating income. So you have to learn the terms, the jargon. Well, how is debt different? What's an interest-only payment? Because you don't typically get that with a residential product. All these things. So you have to learn about the commercial asset, multifamily, the different strategies that come into play. What's the value add strategy? I actually just did a video on the value add strategy in multifamily, and I'll put a link up here somewhere so you can take a look and learn about the value add strategy as it pertains to multifamily real estate investing. Step number 3, I'm jumping ahead, is research your markets. There are strong markets, there are slow markets, and a market does make a big impact on the performance of your asset. Now, obviously your team and the asset you're buying is most important, but the market can give you a nice little push if you're investing in the right markets. And I actually have a free download for you. It's called the Top 7 Key Market Drivers to Look At When Investing in Real Estate. And you can just go to topmarketdrivers.com to download your free copy, and it will walk you through the key market drivers I look at when analyzing a real estate market. And we'll talk about the real estate cycle and how GDP growth, which is at the very start of the cycle, impacts rents, vacancies, and eventually the final sale price of the property as it goes through the entire cycle. So topmarketdrivers.com to download your free copy. And step number 4, active or passive. This is an important decision to make because it's going to take you down two totally different paths. Are you a high income earner now who's already an expert in their field? Maybe you're a doctor, lawyer, accountant, programmer. In this case, you're already busy being an expert, being great at what you do. Don't switch jobs. Don't hop over to real estate investing. You're going to make far more money keeping your current job, your career, doing what you do best because you are a pro, and then investing passively in real estate deals because there's a syndication structure, a fund structure, there's partnership structures, there's a lot of different ways that you can participate in these large commercial real estate deals. But if you want to be active and you want to work full-time in these assets like I do, sourcing deals, underwriting deals, raising capital, all that sort of stuff, well, that's a differentiation that you have to make. And a lot of active investors start off passively. So think about how you want to be involved. But like I said, there are so many opportunities now for passive investors who don't have the real estate knowledge, but they have money to invest. They can invest in some dynamite deals and earn a very healthy return on their money and get all the tax benefits and capital preservation and all those benefits that come along with investing in multifamily real estate. So that's step number 4. Step number 5 is to network, because you want to network with multifamily operators, syndicators, fund managers, because here's the truth. The general public doesn't find out about the best multifamily investment deals. That's the way the law is written. There's something called 506B, which is a type of offering, and that means that me as a real estate operator can only approach accredited investors that I already have a relationship with. I can't advertise these deals on social media. I can't advertise these deals on TV or on the radio. That's why you never hear about these. So all the best investments are done without the general public knowing about them. So you have to network with these people involved in multifamily real estate syndicating. Maybe they manage a multifamily fund. Maybe they do some partnership structures. You have to get on these people in their Rolodex, so that way the next time they have a deal, they'll pick up the phone and call you and introduce the deal to you. But you have to build a relationship. So go to some real estate investing meetups. There's meetups all around the country. Go online. There's a lot of great websites, message boards, or watch some YouTube videos and reach out to people doing the deal. So send me an email, or you can just go to callseth.com and schedule a 20-minute phone call with me, and we'll talk about your real estate investing goals. But networking, very, very key, just with the way the securities laws are written and how we have to stay compliant. So I can't advertise the deals, and that's why you have to network with the people doing the deals. And step number 6, deal flow. Once you get on the list of all these syndicators, fund managers, other people working in the multifamily real estate space, you're going to start getting deals sent to you, and you're going to get the full marketing package where we'll talk about the markets, the opportunities they see in the deal, the neighborhoods, all the projections, what strategies you're going to put into place. This is where you will learn a whole lot, because you're going to see real deals, real live deals where people are raising capital. There's also going to be an opportunity to hop on conference calls or video meetings and ask questions of the people working on these deals right now. So a great opportunity for you to learn about multifamily as a real estate asset before you even invest in a deal. And last but not least, step number 7 is pull the trigger and invest. Too many people sit on the sidelines and don't do anything. I get phone calls all the time. I talk with people that I met 2 years ago and they haven't done anything. You don't make any money, or you don't have the opportunity to make money if you just sit on your hands and don't do anything. So once you've gone through all the steps, all 6 previous steps, you're going to know what you're investing in. You're going to have confidence in the people you're working with. You're going to know your goals, where you want to end up. You're going to know the markets. All you have to do is invest. And once you get into your first deal, the second deal is going to be easier. And then the third deal, then the fourth deal, and it just snowballs and snowballs. But to learn what markets I'm currently exploring and how you can invest in the deals I'm doing, head on over to callseth.com and set up a 20-minute Zoom call, and we'll be face-to-face thanks to the power of the internet. And if you like this video, let me know by smashing the like button and leaving a comment below. Let me know what your real estate investing goals are. And until next time, happy investing.